Hey YouTubers, Ernie here, and time for my market analysis. It was really a spectacular day, although some may have missed what was so spectacular. And what I saw was that high beta led the market. Now what that means is that risky plays were the name of the day. And when the market has its trust in risk, that's a good thing. So, for instance, the NASDAQ has just been on fire. It's just been going nuts. It really made a big leap today and finished near its highs. That's a good thing. Now, if it were the S&P or the Dow that were leading, that would get me worried. That would say that, investors are looking for more comfort or safety. So when you have an advancing market and risk is the name of the game, that is a good thing. That means people want to take chances. They got the cojones and they feel good about it. They don't want to look back, and it means that the bulls have the upper hand and the bears. Well, as you can see, anytime we've done a little selling, it's been bought right back up. So I guess the big news is what happened after hours. Now, there were a number of companies that reported, and it wasn't really all good news. In fact, Yahoo was down, let's see, I have my little report here. Yahoo was down 3%, Juniper Networks down 7%, Cree down 6%. Yet, the futures are all up. All the indexes, they're all up. Why? Because of that beast called Apple. Apple had blowout earnings. But everybody kind of expected that, and it was kind of interesting even today. Apple didn't finish in the green. It was held back a little bit, but it was no big deal. I don't think that anybody that was trading Apple really was worried. They knew that once Apple reported in the afternoon, it was just going to take off. So that's all good. Now the big question is, can this carry over till tomorrow? Now, Apple's a great company, and they're doing great stuff. I mean, they're really unique. Will they be able to carry the rest of the market? Will the futures that are up now be up tomorrow morning? And will that carry through in a broad market participation? And the way we find that out is by looking at the advanced decline line and the up-down volume and the total volume. Now, if there is broad market participation, then a large number of advances will be leading decliners. If it's really just segmented to companies like Apple and a few other high beta plays, then our advanced decline line ratio will be much lower. So I'm really hoping for 3-to-1 advances to decliners or more, or 4-to-1 or 5-to-1. 8-to-1 would be fantastic. That means that this, whatever advance that we have tomorrow, if there is going to be one, would have broad market participation, and that's really what you want to see. Now, I know a lot of people like to hold stocks right into earnings. As a general rule, I don't like to do that. It's very risky, and if you do, you really never know what's going to happen. I mean, Apple did wonderful, but look what happened to Yahoo, Juniper, and Cree. I mean, they just totally tanked. And if you were holding those, you'd see the market, the futures were up, but you're sitting there with a lot less clams in your pocket. So, as a general rule, I don't hold going into earnings. Although I made an exception for Citi over the weekend. And I held Citi into earnings and came out doing quite well. But that was because the hit that Goldman took last week was, and it also brought Citi down. And Citi's been on a tear. So I got into Citi very, very low, and I bought a ton of leaps. And I think that was a good move. So there are exceptions to the rule. When you see sort of like these black swan events, that might be the exception. But as a general rule, I don't hold into earnings. Now, volume has been great, but I think there's this misconception out there that high volume, lots of high volume is good. And that's true when you start talking about inflection points, like on breakouts or breakdowns or blasting out of a wedge or something like that. That's where you want volume, right? But you can't have high volume all the time, because if you did, then on the converse, you would have, when market turns, you'd have high volume the other way. And quite frankly, there's only a limited supply of money out there and people to spend it. So really what you want is something that's more consistent, steady as you go, and then, pump up the volume when you need it. Let's see. I think that's about all I wanted to say. I have a few charts here that I'd like to take a look at, So we have, I have the NASDAQ, which is showing that it's following a beautiful uptrend. That trend line is providing great support, as well as the 20-day moving average is rising up with it, and it's using it as support. Here I have the S&P. You can see S&P has established 1150 as great support. So we are extremely overbought right now, so that kind of concerns me. And we did have a little bit of a pullback with the Goldman incident, but it wasn't really quite enough, I think, to bring enough buyers back into the market. I think we probably need another 2 to 3% pullback so that we can continue going. Now, as a general rule, I believe the market is just going to go like this right through the summer and maybe into the fall. And the reason why I say that, and the reason why I am the prognosticator here, is that the money that has been injected into this market is immense. Both the government, mainly, and now institutional buyers are just all in, and now the retail buyers are starting to come in slowly, but they're coming in. And while we have this influx of money flow, really the market can't fail. There are a lot of people that are talking about a major correction soon. I'll have none of that unless there's a black swan event that would cause that. I don't believe that we're going to have a correction of any major sort. Maybe 2-3%, but nothing more than that. However, all bets are off once the money dries up. All right. So oil services is starting to break out of its rising wedge. So that's one of the commodity plays, and of course silver and gold both put in black candles today, although they have maintained their rising trend line. So I feel pretty comfortable about that. So I think that silver wants to pull back a little bit, and it looks like the MACD and the stochastics and some of the other oscillators, indicate that it might pull back a little bit. But I think it's right near support. So it wouldn't surprise me if we move up from here and try to break through. Now, for silver on the ETF, what we're looking for is to break through, first of all, 1850. That's the first inflection point, but the major is at 19. If we can get through 19, then the next, I'd say the next resistance, it's a clear shot right up to 25. But it's going to take a little bit to get through and break out of that wedge. So I think what's more likely to happen is that we're going to probably grind through and reset some of those oscillators and try to get to a more oversold condition so that the buyers can come in and start moving this up. So I think we're going to generally move sideways for the next week or so with silver and gold. Well, that's my analysis, and we'll see you next time.